Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me. Getting over to Chewy. So with this one, I had the alert placed here at $32. Not exactly sure why I had the alert there, but I did not want to be buying the top. So that's why I placed an alert there to see, where this could be coming back to. And that probably corresponded with the highs from over here. It looks like the highs from September, and then also pulling back to a little bit of a dip here around 32 in the middle of November, testing that prior resistance as support over here, kind of getting a fake out breakdown below it. And really, testing that 50-day moving average before continuing higher. And so with this, I would have to say there are a few things that stand out to me as, I am not ready to buy this. And even if I was ready to buy this, I'm trying to be a little bit more better at managing risk. So I would probably still wait for this to come further to the downside. And with that being said, I should note that Chewy closed yesterday at a price of $31.83, being down about 4.5% and effectively being flat in the pre-market. And so, yeah, looking at this, you can probably tell, there's this uptrend. I might actually make this green to kind of signal that that is potentially a dip buying level. That does go back to the low from April 25th, as well as the pivot low from August 5th when markets gap down. That's a very important, very special day. And so based on that trend line that has acted as support over here, we have not yet tested that. And so I could see the price coming down a little bit lower, maybe coming down, in all honesty, to around $30 a share. I've already got that marked there, so I might just delete that $32 alert that I have there. Actually, well, yeah, and I'm just going to be disciplined with this. I think that $30 could be tested. There are a number of reasons for that. One is that green uptrend. We could always wick below it, close above it. That would be fine. Even if we wicked and closed below it, that could be a fake out breakdown to shake out weak hands. And so with that, I could see price coming down to around 30. We also have this blue line here, which is the 200-day moving average. That is currently at 29.86. So there's kind of a confluence of levels there also, with that being a whole dollar round number being divisible by 10. I think that could be a dip buying level for a lot of people. And then it probably stands out, this horizontal white line at 29.92. That is the 50% retracement from this retracement that I have here, going from the low of August 5th, that was at 1975, to the high that we saw over here on January 30th, which was at $40.09. So there's that 50% retracement there. And so I would view this as, coming back to this uptrend. Still needs to go lower. Maybe that's at 31, but I think it could go lower than that. I think it could break lower. I think it could find the 200-day moving average as support at around 30. And also this 50% retracement seems very reasonable to me. And if we look at that level over here, that does look like it was kind of, it's a little bit ugly, but maybe there's this like head and shoulders pattern here with both of those shoulders finding that level as resistance with a little bit of a fake out breakout up here serving as the head. That seems like it could be a level that we would be revisiting, could definitely be revisiting, but we could also be heading lower than that. And so that is why I personally would want to be disciplined and wait for $30 a share. And the reason why I think we could be heading lower is two reasons. One is on here, one is not, but that's the 618, that's at 27.52. We do have, levels over here that acted as some support some resistance. It looks like in August, the middle of August, got rejected from there before pulling back to that 50-day moving average and then going up higher. So that could be acting as support if we do break below 30. Also extending that over here, some more resistance here. And if we do take a step back, yeah, I mean, really just coming to over there. And actually, taking a step back, I do see this level over here around 25. That was some pretty notable resistance. And so if I add over here the 786, let's see where that level is at. I suspect it will correspond with and my cursor, there we go, it's back. Yeah, the 786 around 2410 corresponds pretty nicely with the top over here. So that's another level that we could be heading down towards. But the one that I do not have drawn up here, we see a little bit of a gap. I'm just going to remove my drawings here for a second. You can see that gap very clearly over here. And so while one might think that we have a gap based on the high from November 1st to up there, gaps are actually based on the closes to the following days, either lows or highs, depending on what you're looking at, the direction it's going. And so the close from November 1st was at a price of 27.12. And so I am going to draw that level over here, 27.12, make that a dashed line because it's an unfilled gap, and I like to make my gaps blue. So I think with Chewy, if you want to go long on it, if you are long on it and are waiting to buy the dip to get the average down, however you want to think about it, I think that 30 is going to be the level to be patient for. I think that will be getting tested, but I of course could be wrong. But I'm not going to place an alert at 31. I'm going to be patient because I want to see it pierce this uptrending level. And also because of that 200-day moving average, the 50% retracement. And really, I feel like the 618, that's the most compelling level. 30, that could be a nice level to get a starter position, maybe a quarter of a position. But then coming down to the 618, filling that gap, that could be a nice level to get another quarter of a position, so to accumulate to a half a position, to be then ready for, or maybe then get a half a position, so you got 3/4 of a position, but then be ready for 24, 20, 10, 25, whatever, somewhere around there, to then go more heavy. And so with earnings coming up, it looks like on the 26th, I think that we could continue to see a sell-off getting into the 20s before earnings, and then maybe around then, that would be when we see a bounce. So pretty cool there. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching.